Hi, I am Anna. I come from www.ntvforex.com. Asia Oil The OPEC agreement seems to be working well. http ntvforex.com news ID CCCA 60 7/16/2023 02:46 am. No taper tantrum. It looks like the taper to 7.7 mbd will happen after all. Still, Saudi Arabia's oil minister pointed out that overcompliance by producers who failed to cut entirely in May-June will mitigate some of the actual production rewinds. OPEC delegates say unofficially that the group has agreed 842 kbd of compensation cuts in August-September, meaning about 1.15 mbd of production will be added rather than the 2 mbd specified in the April agreement. It will be a disappointment to some that the 9.7 mbd reduction has not been extended again. Still, it's ultimately supportive for oil that the OPEC agreement seems to be working well, and even more important is that OPEC compliance is on a unified front. Nevertheless, in essence, the production taper reflects improving global demand and should be fundamentally bullish for oil on the margins. Still, full compliance is more critical than ever, given COVID-19 second wave risk, and that the monthly oil market monitor will continue to provide the market with forward guidance. Trump diffused China tension. Oil markets heaved a massive sigh of relief and bounced higher after President Trump indicated he doesn't want to escalate tensions with Beijing. With the U.S. equity markets in a bit of sweet spot these days, Trump probably doesn't want to rock the boat too much, knowing how fragile risk sentiment is with COVID-19 still ravaging parts of the U.S. Keeping U.S.-China tensions at the pillow fight stage is ultimately suitable for oil markets. Colossal inventory draw. Oil has been supported Wednesday by the significant drop in U.S. crude inventories, while OPEC comments on improving compliance with production targets continue to resonate. And given the production taper was far from a tantrum, it allows oil markets some breathing room to catch up with other risk assets that have been reveling in the China reflation trade. Oil market sentiment has been bolstered by a significant drop in U.S. crude stocks, helped by a fall in crude imports, while gasoline stocks declined by 3.1 mbww in line with seasonal norms. So, despite the increase in COVID-19 cases and lockdown restrictions in individual states, U.S. oil demand recovery continues. Traders expect the market to tighten over the second half of 2020, so the peak for U.S. oil inventories may be behind us. However, there's a risk that the restart of shut-in wells could put upward pressure on U.S. crude stocks in the near term. Oil market's de facto COVID fear index. Some traders view the gasoline inventories as the oil market's de facto COVID fear index. And the fact that gasoline inventories are reacting in line with season norms, rather than exhibiting counter-seasonal builds, bodes well and suggests the COVID-19 consumer fear factor is not as intense, despite nascent signs of mobility data flatlining. Subscribe our channel to receive the news as soon as possible. Thank you for watching.